All right, good afternoon, everyone. Futures Barizio here on the live stream, 2:20 p.m. on Wednesday, February 12th. Hope everybody's had a great day so far. Just want to do a quick update here, and again, we are live, so if you do join the streams, make sure you smash that like button, subscribe to the channel. Any questions, comments, drop them in the chat. If you're watching it afterwards on the YouTube channel, perfectly fine too. Just let me know if you have any questions, and make sure you like the video and subscribe to the channel. All right, so here in the U.S., we did have core inflation, or just inflation numbers, CPI, come out this morning at 8:30. So that really threw the market into some big volatility in the indices and the U.S. dollar pairs in particular. And we saw inflation numbers basically come in pretty hot again, which theoretically should be good for the dollar. And we did see a lot of whipsawing where the dollar initially went up and then fell back and now appears to be going up again. So, some uncertainty from the market about it, but I do anticipate that overall this should be helpful for the dollar, because again, a higher inflation means theoretically higher interest rates, or the Fed at least not cutting rates, which makes the U.S. dollar more attractive for investment, and therefore can drive the U.S. dollar higher. Not good for the consumers, and for us, that have to pay the higher inflation pricing, but it is good for the market and investing and for the dollar. So, all right, so just wanted to point that out. That was the major news for today. So just jumping into the charts, let's start over on futures since that's what I clicked. So copper continues to go higher here. So we did have this low put in, which I talked about the last couple of days. We had this move down, which bottomed out here yesterday morning. And we just kind of consolidated, but we did shoot higher today. We did come back to this high up here. We did not break it. You can see we came up to it and it seems to be rejecting, but a lot of that is probably just profit taking. Although again, I will point out on the daily chart that we do have this area up here. I pointed this out the last couple of videos, that we have this area up here where price, tried to push higher back in the end of September, rejected off there, and we had this big down move that followed after that. So obviously this is a little bit of a self-fulfilling area. There's a lot of profit taking going on at these levels. It doesn't mean that price will turn around and go back down from here, but it does mean that there is potential for at least a significant pullback off this area. And probably the other reason why you're seeing price have trouble getting through these highs, it's just profit taking, right? People that went long here, it's a combination of profit taking and maybe people are trying to pick highs up here, which is a dangerous game, trying to pick highs up here and trying to sell into this. That's a dangerous game when you clearly have bullish order flow, unless you're scalping. But if you're trading on intermediate or higher time frames, that's probably not smart to do unless you really have a structure change, which in order to get that, we would have to probably take out this low that was put in yesterday. So that's copper. So again, I would be cautious at these levels, just because of this all-time high that was put in September. Again, not in any way, shape, or form mean that that's going to hold it. It could just, pull back and just smash right through there and make new highs. But just be cautious, right, that you are entering an area where there has been significant selling before. And, I would just probably watch volume levels as we get up into those areas. I don't normally follow volume, but that might be a time when I might look at some volume on the on the candles, just the regular volume indicator that paints at the bottom, the time-based volume, just to see what happens with volume if we get up and start approaching those highs. If volume starts to fall off, then especially positive volume, then that would suggest potentially that the market's going to run out of steam there. But don't try to pick tops or bottoms, and we'll just see what happens. So onto the DAX. So the DAX did put in this low. This was again earlier this morning, and then went up and has made another new high. This I'm assuming this was probably the news, the 8:30 news here. Let's see what time this on the hourly. Yeah, this was the 8:30 news. The spike down and then was a buying opportunity. I just chose not to trade this because it was during the CPI news, and I just rather not. But clearly, it was a good buying opportunity. So DAX continues to chug higher. So we can move this up here as kind of our next swing low, and just go from there, and just continue just to see this market pull back and go higher. And it's very classic. We're seeing pullbacks happen during the mostly during the overnight session, but like yesterday, it happened during the early session, London, and then it took off during New York. So, but sometime during that either overnight Asian session or London session is when our corrective times are happening, and then it pops up during the U.S. Stock market session, or just before that opens, like maybe 8 a.m. New York time as opposed to 9:30. So sometimes you'll get that pop a little bit earlier, but I would be looking for entries somewhere around that 8 a.m. between 8 and 9 a.m. time frame. Until if and when the structure areas are change. With live cattle, we tried to go lower again today, but it just kind of ran out of steam. We had this push down earlier today, and then it went back up, retested highs, and it kind of drifted lower again. But it's kind of stuck inside this little range right now, right here. So not really doing a lot. So it's really very whipsawing. And so I would anticipate, just by looking at the order flow here on the 4-hour chart, that we will eventually throw some new lows in here. I don't see any reason why this would turn and go up right now. From a technical standpoint, there's nothing here to suggest that until, the bare minimum area would be like maybe right in here where we've got some previous resistance and we had a little bit of bullish momentum coming out of this little pullback area. But that's even really nitpicking. Really, until we get down to this area or down to into this range is where I would anticipate it would go. So I am still looking for shorts here, but didn't really confidently get it today. Didn't really see anything super bearish to suggest that. And so just chose not to do anything. But I will be watching this tomorrow and Friday, in anticipation of maybe grabbing another move down. Remember, this asset doesn't trade around the clock. This is limited to about 5 hours or so a day. So the market is, I think, is pretty much closed or closing for the day today. So this is one of those ones where you have to kind of strike early, when the market first opens, within maybe the first hour to maybe 2 hours at most. And then after that, if nothing happens, I would just be done. And I don't even know if I would hold it past that, like I did 2 days ago, or I took this trade yesterday and I just exited at these lows, and the market just proceeded to stall out and reverse. So I was glad I got out of it. Now again, I do technically looks like it's going to keep going down, but at the moment it's just it's taken a pause today. So whether we get a little bit more retracement back up, or whether, maybe tomorrow it just chops and then falls, we'll see. But that's, like I said, it does look like we certainly have good bearish order flow in place on the 4-hour chart, and I do anticipate that to continue just based on, looking to the left at where it could run into trouble. I don't think, we'll see that for a little bit still. All right, and then the last one is, get rid of that. The last one is natural gas. So you can see I am in a long here on natural gas. It wasn't a terrific fill, but I did see this pullback that happened. What time was this pullback, this bearish candle? This was right at the New York. No, actually, this was about 2 hours after the New York Open. So this was around 11 o'clock or so, 11:30, where we put in this big bearish candle. I took that as a buying opportunity because you can see we had this structure level on this pullback. This became our structure level. So in fact, I'm going to move this up now. So that became our structure level. And when price came down, it didn't come anywhere near it. I mean, we had put in a big bullish candle. That's kind of a liquidity sweep. And if we go to a shorter time frame, you can see it right here. And then we immediately came back with this bullish candle, and that's when I took the long. Zooming out a little bit on the 4-hour chart, we have now essentially taken out this swing right here, which is where this was getting hung up at this previous swing high. Again, this was an area that was being probably targeted for profit taking and maybe trying to pick a top. I think that area has now, unless we get a big rejection off where price is now, I do fully expect that area will be rejected and we will go higher. You can see I have a take profit. It's not sitting up here at the highs, but it's sitting up here at an area where I kind of feel like there could be eventually some selling taking place just below these highs. It's probably a pretty conservative take profit where it certainly could go higher. But the reason why, again, if you zoom out to a higher time frame, like an 8-hour, you can see this big bullish candle on this that made this new high, and this bearish candle was followed with the closing prices on both of these, or actually the closing price on the bull candle and the opening price on the bearish candle are right in the same area. So clearly that's an area that's being watched. It's around that 3,700 range in gas, and so I just felt that was a good target area to put my take profit. It's not to say it won't spike right through there, but it still gives me about a 3-to-1 risk to reward ratio. And assuming that we hold the levels we're at now, I do think it'll make its way up there. Not today, but it certainly could reach up there tomorrow. So I'm going to hold this one probably through the session into tonight, and we'll probably see it retrace during the overnight session. And if it does and it looks corrective, that might even give me a chance to add to the trade tomorrow sometime, and maybe add on to it and pull a little bit more out of this if this is what it ends up doing. So we'll keep an eye on it, but that's natural gas. All right, so just moving over to Forex quickly. Dollar yen, I was talking last night that this thing, we had this big candle. This was the candle that was being formed last night during the overnight session. Or was it this one? No, actually, I think it was this one. Yeah, it was this one right here. And then price went sideways. We had another push up. Now, on the 4-hour chart, we do still have this overhead area. On the daily chart, we still have basically bearish order flow in place overall when you look from here to here. But again, looking at the bigger picture, we did have this push out of this zone on the daily chart, made this high, and then we had this retracement. So this does look pretty bullish. I would anticipate that I would be a buyer on this if we get through this zone up here, and we'll probably go up and make new highs. Now, it's a lot I'm leaving on the table here. I'm not saying I wouldn't trade these highs. I mean, this was a great pullback area right here. I didn't take this. My views were really more on like dollar Swiss, pound US dollar, etc. And I'm certainly not trading anything this time of day. But certainly I think there's a case to be made for long positions, at least back to these highs in here, though this is kind of like equal retail highs. So I do think price would probably break through here. I'm more interested in this area back here. So really, but anywhere inside of this rectangle, I would expect price to make its way towards these, back into this area. And then after that, we'll see. If we get a big reversal and we take out whatever structure has formed at that point, then maybe the downtrend continues. If not, and we keep making higher lows and higher highs when we get through this box, then certainly my bias would switch more long. Based on the CPI numbers that came out today, Excuse me, I had to grab a drink. It probably leans more fundamentally standing that will probably turn more bullish on this. But we'll see. And the yen certainly has something to do with that too. All right. So Swiss yen's kind of the same story, different fundamental reasons, but we basically have the same picture on the chart. And so again, I would anticipate continuing making new highs, at least back towards these highs or inside this box. And again, from the daily chart, not as obvious as the dollar yen, but we did have these lows down here. The price came down to, it seemed to reject. But again, you know, there is, to me, this is an even more clear zone than what we have on dollar yen. Even on the daily chart, you can clearly see this pullback zone. And so again, I can definitely see, you know, long positions between here and this yellow box. After that, I'd want to see what it does in terms of continuation, whether we reject and continue the bearish order flow anywhere between here and here from where it is now up through here, or if we can solid break through here without some kind of big wick like this. You know, close basically, I'd like to see a close above this high right here would be ideal, like a solid close right above that high right there. I think would be pretty telling in, you know, looking at the bias turning long. But until then, you know, I'm kind of mixed on it just based on the price action we've seen, but where the order flow still is pointing to. So we've had bullish price action the last 24 hours or so, but we're still technically in bearish order flow. And so you have to respect that until it's broken. Again, doesn't mean you can't trade this bullish price action right now, but, you know, just be aware of what's going on in the higher time frames and, you know, be cautious. That's all. Just be cautious. So, because I don't have a crystal ball, I don't know what it's going to do, and neither does anybody else. So, okay, pound US dollar. The pound USD is very choppy right now. I just don't like. I mean, if you just look at this area, just basically the last basically 2 weeks or so, we've just been chopping around a lot, and the CPI numbers certainly didn't disappoint in that respect. We had a big push down, then a big push up. Now it looks like it wants to come down again. I don't know. So the pound USD, I was hoping we'd get a little bit more clear direction on it today, but we didn't. And so for now, this one's not at the top of my list until we get some clear direction of this thing breaking out of this chop area that it's in. You know, now whether this is a higher low put in, a higher high, and we're going to now just take this area and assume this is an uptrend, I don't know. It seems every time price tries to run up, it gets pushed right back down into this range, which it did. We made this new high, and then it pushed it right back down on the next candle. So there does seem to be a lot of selling in here. If the US dollar maintains its strength based on like the CPI numbers, then this will eventually turn and go back down. But obviously this time of day it's nothing you can go by right now, so we'll have to see as we go forward. Pound Canadian, again, kind of the same story. On the daily chart, I say we're still in bearish order flow here. Overall, we do have this swing. This is what I was talking about last night. If this area does not hold and we start running higher, then I think price easily runs up to this area. I don't think this area right here will prove anything. I think that area is already, for you, kind of ICT traders, this area has already been kind of mitigated by this candle right here. So I think any liquidity that was sitting over here is probably gone. So we've got this retail equal highs running through here. I think if price gets through here, it'll easily run up to this level. So that would probably be my target. But again, it's been very choppy. It went down, CPI came up to the zone. Looks like it was rejecting. Now it's trying to go up again. So I don't know. But I think For now, you know, unless this area is breached, I think you have to go by the fact that we're still in bearish order flow. But again, in my opinion, if this area gets taken out and we get a nice close outside this rectangle, again, somewhere above probably this, this high right here. If we get above there, which is basically a solid close outside of this window, then I'd probably turn more bullish, at least up to here, which, I mean, that could happen in one candle, two candles, but that would be a minimum target. And then if it gets through there, then obviously run up towards these previous highs. You know, just looking at areas where price might run into some resistance areas. So, and the other thing, guys, is I like to look at these breakout on these, like say a breakout out of this rectangle on like a 30-minute to 1 hour chart, because if you go down to like a really short time frame, like say a 15-minute chart, you might see a candle on like a 15-minute chart that looks like it's closed above this range because it's on a short time frame. So say a 15-minute or shorter, you see that one candle close above, and if you, that's the short time frame you're looking at, you're like, oh, there's a breakout, and then next thing you know, it turns and goes back down. Not that it always completely filters out those kind of false signals, but I find using a little bit longer time frame, although you might not get a sniper entry, maybe looking at like a 30-minute to 1 hour candle, you'll see less of those false wicks, those false body closes above a zone, because of course it takes into account more price action, and you're more likely to see a wick form back into the range as opposed to having like a 10-minute or a 15-minute candle that closes outside the range. It might lead you to falsely believe that there's a breakout happening, which of course they do that on purpose to try to lure you in to, you know, go counter trend, only to have it come right back into the range and reverse and keep going down in this case. So just be cautious of that. Again, I'm not saying I don't look at the shorter time frames, but I take any candle body closes outside of a range that happen on a short time frame with a little bit of a grain of salt. And I really would like to see that confirmed by, like I said, at least a 30-minute time frame, maybe a 1 hour. And, you know, then I'm more apt to believe that that's a true representation of what price wants to do. Because, again, a lot of times it will just throw a wick on the higher time frame on that 30-minute to 1 hour. And then that will tell you that that's probably a false breakout. Where on the 15-minute, again, you might see a candle close above there, you know, with a strong close, and you get lured into thinking that that's a breakout. So just a little tip that I use when trying to determine whether we do have a real structure break or if it's just a liquidity sweep and, you know, an inducement at a key level. So, okay, and then lastly on the dollar Swiss. So again, strength with the dollar, who knows? This was this morning when the news came out. It happened in here. We had an initial little pop, then price pulled back, and then we shot up, made a new high, came all the way back down here the last few hours, and now it looks like that was basically a pullback, and now looks like it's trying to go higher. So again, based on dollar strength, I would expect to see dollar Swiss run up and make new highs just based on this. If this level right here does hold, then you know, I'd probably consider moving this structural line at least to here, if not here, just to kind of capture this zone. If it goes up and make new high, I probably would put it right here. So for now, I'll just leave it here as kind of the structure area. It does look like it's trying to go higher. We put in this low, and then we had this engulfing bullish candle. And so, you know, we'll see what happens. But again, based on dollar strength and just looking at, you know, this bullish order flow on the 4 hour chart, I think it's reasonable to expect price to at least come back up near these highs up here. I do think there's a reason to consider, if it does get up here, exiting just based on the previous resistance that it's twice run into here. Again, doesn't mean it'll stop there, but it's a reasonable place to, consider managing your trade from. So, and at least locking in some profits or trailing your stop or doing something like that to protect your profits if you have any when it gets up into this area, in case it does choose to have a big reaction down like it did the last 2 times it got up here. Doesn't mean it will again. Could just be retail, double top retail highs here, and third time doesn't mean it's going to react again. It probably will have a reaction, but it doesn't mean it'll be a reaction like this or like this. Again, you have to look at market structure and whether that gets broken or not. And that's what I go by, not necessarily those double tops or double bottoms or whatever. But just be aware they're there, because certainly price will have a reaction off those areas, even if it's not an outright reversal. And you don't want to just give back all your profits because you didn't want to manage your trade and just tighten things up a little bit. Doesn't mean you have to exit, but just manage it, protect some of your profits, move your stop to break even, run a trailing stop, whatever. So just to give yourself some you can take some money off the table. So all right, so yeah, that's about it, guys. I think I'm going to leave it there. A little bit of a choppy day today just based on the CPI numbers, but fully anticipated in terms of the volatility, although obviously the news was that the numbers were higher than what they expected, so that certainly causes that volatility, because the market was expecting kind of more tame inflation numbers, and that's not what it got. So, but theoretically should be good for the dollar. We'll see if that translates out in the long run, but at least in the short term, I think it'll be helpful. So, all right, so I'm going to leave it there, guys. I hope you have a great rest of the day. Unless anything really remarkable happens, this will probably be my only video today, given the time. It's almost 3 o'clock New York time, so I don't really expect anything else to change between now and the end of the session, and I don't anticipate anything earth-shattering during the Asian session, but we'll see, and keep an eye on just the handful of things I talked about, and we'll go from there. So I'll be back tomorrow. Hope you guys have a great rest of your night. Any questions, comments, leave them down below. Make sure you smash the like button, subscribe.